Would you be against taking one trade on one pair once a week, using a powerful psychology trick that the big banks don't want you to know? Then this video is for you. Welcome back to the channel, I hope you enjoyed the video. Please click that like button and let's get straight into the strategy. Many people say that psychology is 90% of the trading strategy itself, and this is extremely true. We can use this to our advantage to make huge profits, and even pass prop firm challenge accounts. Let's jump straight into it. We're on the 4-hour chart and we're going to be using the box tool to make profits. This is the only thing we'll be using, and I'm going to show you exactly where to put it. We are going to be trading week to week, so we're going to be entering one trade per week. We usually enter this trade around Monday, Tuesday. Make sure you're on a 4-hour chart, and we're going to look at the candles here. You can see the dates at the bottom. We're going to be focusing on the first 2 4-hour candles of the week. This is the first 2 candles of Monday, and this represents the first 8 hours of the week. How price moves during this Asian session determines the psychology for the rest of the week, and this is very powerful, and we can use it in a special way to make profits very consistently. If we look at these candles here, you can see this is the Sunday, this is also Sunday, and then this candle right here is Monday, representing the first candle of psychology, and this is the second candle. So after the first 8 hours of every Monday at the start of the week, we will use these 2 candles and draw a box around them to represent the highest point and the lowest point. You can see the top of this candle is right here, and this is the highest point of the 2, and it's also the lowest on here. So we will draw a box like that, as that represents the high and the low of the week. Now we want to zoom out and drag this box right across to Friday night or any time on Saturday. We will also get a second box and draw it to cover the first 3 candles of the week. This red box represents the zone that we will not be taking trades during. Okay, so let's go down to the 15-minute chart and look for our proper entry. Okay, so this is on the 15-minute chart. Now we can see that this red zone right here is when we aren't taking trades, and all we are doing is waiting for price to push outside of this psychological zone and then show us some kind of rejection formation. This will either be a railroad track or a star formation, which is a morning star or an evening star. But we are only looking for price to come outside of this psychological zone and then to reject and turn around. There is a very special trick that we are going to use with the stop loss level, so make sure you watch this now. Again, this grey box represents the psychological zone. This red box is when we are not trading. We wait for price to come outside of this psychological zone. Huge downward candle right here, and then 2 consolidation candles, and then a pull back up. This right here represents a delayed star formation. Usually a star formation is 1 candle down, a delay, and then 1 candle right back up. But you can just see here there's 2 delays instead of 1. Enter your trade here, and we're going to be using a very powerful trick to take profits and a safe place to put the stop loss. We are going to be targeting a 2 risk to reward. For a buy, we'll be setting our take profit to the top of the psychological zone, which is right there. We will then drag the stop loss down until we have a 2 risk to reward, just like that. Trade would have closed at 2:15 on Monday, and the trade would have hit take profit 4 hours later. We set and forget the trade, we don't move to break even, we don't close early, we don't manually change the trades, we don't take partials, we set and forget. If we go over to the following week, and you can see here price wicks out but doesn't actually close. We only want to focus on when price closes outside of this zone. This right here shows that price has actually respected the psychological zone. Price comes out here and closes, comes down again, and then comes back up. This right here represents a railroad track when price comes down and then back up, and this is a very strong indicator of price rejection. We set our take profit to the top of the psychological line and then target 2 risk to reward, putting our stop loss down here, and even though there was a pullback that come into the stop loss zone, it was still safe, and we hit our trade profit at 12:45 the following day. Okay, so it's results time. Please click that like button if you've enjoyed the video so far, and now I want to show you exactly the results that got us to 250% in 1 year. So these are the results. We had an initial account balance of $10,000. This is based on a My Forex Funds account. I do not advise risking $10,000 of your own hard-earned money to trade. We had a 2 risk to reward ratio, and because we were only trading once per week, I was risking 3% of my account to make 6%. We had a 61% win rate, and with a $10,000 account in 52 weeks, which is 1 year, we made a 250%, which is $25,000 profit. Making an extra $25,000 a year can really help a lot of people out that don't have a lot of free time, and they can start to free up some more time to spend with family. If you prefer to scalp many trades a day, then check this video out right here, or if you want to see exactly how I trade, then click the first link in the description.